Welcome back to the channel. If this is your first time with us, my name is Alex. Here we like to talk about all things regarding investing. I help you grow your portfolio in a safe manner. I help you understand and digest those terms that are really difficult to understand. And above all, we like to have fun. That sounds like something you're interested in? Let's get into it. Recently, a lot of my colleagues at work, some of my friends, some of my family members, some of the comments in my other YouTube channel, they always say to me, "Yo, Alex, dude, you're bugging out. You're always talking about put your money in the market, put your money in the market, put your money in the market. Isn't that the same thing as gambling?" Word? Same thing? All right, cool. No, it's not the same thing. And I'm going to tell you why. Of course, there are similarities between investing in the stock market and gambling. But one of the big difference in allocating some of your funds into gambling, say for example, if you take $100 and you allocated it to this particular vehicle being gambling, your chances is to double your money, that $100 to $200, but it's also to go from 100 to 0 versus allocating some of your hard-earned money to this vehicle, say put it in the stock market, that $100 can grow exponentially over a period of time. Now I want to show you two examples. If you go to your local casino and spend $100 a month, once a month, normally when you're gambling on say something like roulette, your chances of winning are between 43 to 45%. So say if you go to that casino once a month, put $100 in, you just put $1,200 into casino and you're gonna win about 43% of the time. That means you lose about 55 to 57% of the time. You're never gaining. Now take that same money and you allocate it to the stock market. Yeah, you're not gonna double your money in the next 5 minutes normally, but it's gonna grow exponentially over a period of time. And you're never gonna drop from $100 to $0 like that. When you look at a company's CEO and the management team and their cash flow, even if you got the most knucklehead company out there, you're not going to jump from $100 all the way to $0 in a span of a couple seconds. I mean, I'm sure there might be a case out there some of you might know about where it just happened instantaneously. If you do, add it to the comments below. But for the most part, if your stock tends to dip over a period of time, you have a chance to pull your money out. So perhaps you bought it at $100 and say like a bad virus comes onto the planet and your stock goes from $100 to $80 to $60. By the way, I would probably buy more when the stock drops if it's a company you have, if you have confidence in. But let's just say you're one of those investors, you don't have a high risk tolerance and you pull your money out at 60. Yeah, you lost 40%, but you didn't lose zero. You didn't lose everything. You still have a little bit of cash in your hand versus this vehicle over here being gambling at a casino, you lose everything. Over here, you lose a percentage. But if you look at history and you look at the stock market over a length of time, normally stocks will increase slowly over a period of time. Now, I want to show you a chart, a diagram of how your money could grow in the market. Okay, if you take a look at this chart here, so you start off with the same $100 and say you invest $100 every month, the same as you would have did at the casino. If you get a rate of return of about 6 to 6.5%, again, you put $100 in monthly, do you realize after 25 years, you would have saved about $73,000? And this is with compound interest and so forth. But think about that. If you go gambling in a casino once a month for $100, 12 times a year, are you going to make 73,000? Chances are you're not going to do this well. Now think about it. If you're 20 years old, and this example here is over 25 years, but let's just say you put $100 in an account every month for, let's just say, 40 years. Okay? With the compound interest and the rate of return of maybe 6 to 6.5%, you're actually looking to closer to $200,000. That is a huge chunk of money that you're probably not going to get from gambling. So another one of those differences is when you take your hard-earned money and you allocate it to this particular vehicle being gambling, you're looking at more of a return of your gains or your profit in a shorter period of time, say 30 seconds, 1 minute, 5 minutes, whatever it should be. Whereas over here, you're taking your money and you're allocating it to this particular vehicle for a longer period of time. be it 1 week, 1 month, 1 year, 1 decade, however long it might be. One of the huge differences between gambling and investing in the stock market is time. You allocate a particular amount of money to this vehicle for a shorter period of time for gambling, and you allocate more money, or you allocate the same amount of money to this vehicle for a longer period of time. Okay, I don't want to beat a dead horse, but so we want to kind of sum up here. The difference between gambling and investing, they're both, you're taking a risk, you're taking a big chance, but your rate of return in investing in the market is far safer than going to your local casino and betting on black. If you look historically at a stock, say, maybe you want to look at Amazon, that maybe 10 or 15 years ago when Amazon was only selling books and they were trading at, I don't know, $25, $30 a share, and you look at Amazon now and I think it's $3,000. So you see not only the money that you get from compound interest as the stock grows and that money that you're putting in, but that stock that you bought originally for $100 now might be worth $2,000 or $3,000 down the line. So your potential to make money in the stock market is far greater than your potential to make money gambling. One way I look at gambling is entertaining, entertainment for a short period of time. I look at investment, saving money for my future. If you're familiar with Warren Buffett, he has a really good saying. I'm probably going to butcher it. I'm really sorry, but he once said that investing is saving your hard-earned money now to enjoy life later in the future. So basically, that $100 you're saving now is probably going to be worth $300, $400, $500 years or decades down the line. You really want to put some money aside for investing. This, I guarantee you, when you get to my age, in your mid-30s or mid-40s, and I actually started when I was back my junior year in college, and I went to college in Southern California, and my econ class, I was trading in one particular, I bought like 10 shares of a company, and I'm not going to say what company it was, but I literally forgot about it. And about, I don't know, man, 7 or 8 years ago, I actually was opening up investment with a different company, and I came across those 10 stocks that I bought years ago. And I think it was actually a local grocery store company in Southern California. And I'm not kidding, I bought it for like $3 or $4 a share. But about 10 or 15 years later, that company that I bought shares in for $3 or $4 was literally trading like $800 or $900. So you see that original $100 investment I put in was now worth like maybe $10,000 or $15,000. So when you're investing in the market, you have a greater potential to make more profit, but in the future, versus when you're gambling, you're having entertaining, you're drinking your tall umbrella, funky boot-shaped drink, I don't know what you want to call it, and you're having a good time, but it normally ends there. So to sum it up, if you can, if you're looking for a little entertainment, take your $20, pop it in the slot machine like grandma. Not that there's anything wrong with that, but don't put your future in the hands of gambling. You want to put it in investing in the market. Do your due diligence, find the stocks that you like. Always look for stocks and companies that you have interest in. I mean, like for me, you guys know I love pizza, so I'm probably going to have some type of stocks allocated to that. But if you have no interest in, say, rubber tires, maybe you don't want to invest in rubber tires because you don't have a lot of interest in it. Sorry, I'm kind of rambling along here. But the main point is, investing in the market is far better than gambling at your local casino or a racetrack. Do with it as you will, but your boy here is always going to invest in the market. If you like this video, please subscribe, like, comment, do all that good stuff. Let me know how you feel. And until our next video, peace.